right, there we go. Hello, hello. John S. Rhodes here of the Rhodes Brothers, and this is Greater Wealth Through Mastery. The topic of today's short talk is Bitcoin and China. So we've got some news happening, and what I'd like to do is share three critical points related to the same topic. Basically, that China is doing things right now with their economy and their money, and as a result, Bitcoin may or may not be impacted. Now, here is the very first and perhaps most important thing to realize. Bitcoin seems to be highly related, correlated to the global M2 money supply. To keep that very, very simple, what that means is as more liquidity, as more cash, as more dollars, as more money from around the world, not just dollars, but as more floods into the system, into every single economy, not just the US, but also, of course, China, which is a big gorilla, then what we have is Bitcoin moving in lockstep. Now, not exact one-to-one, but very close. In fact, one of the recent research reports that I saw from Lynn Alden is that Bitcoin follows in the direction of global money about 83% of the time. Now, you can think about this a variety of ways, but think about the dollars increasing and there being this incredible relation or correlation. So the more money in the system, the more that Bitcoin goes up. Now, this is true for other assets as well. It's true for housing, it's true for stocks, it's true for many, many other assets. Stocks are a great example. As there's more liquidity, guess what? As more money floods the system, guess what? Stock market tends to go up, but it's not nearly tightly as correlated as Bitcoin. So this means that when there's more money in the world, Bitcoin usually goes up. When the money supply shrinks, when the global M2 money supply shrinks, that means that Bitcoin price tends to take something of a hit. What that all means is that with Bitcoin so closely matching, mirroring, and otherwise being related to the M2 money supply, that Bitcoin is better than any other asset in the world. There's not any other asset that is nearly as good at being related to or correlated to the M2 money supply increasing. Very, very important. So you can just think about the Fed activities, what the Chinese are doing, and what other countries are doing as well. When they print more money, when they inject more money, when more loans are created, because that's how money is created. That's another topic for another day. But when loans are issued, you're creating more money, you're injecting more liquidity into the system. So it's so critical to understand that. Now, here's the second thing, and this is why it's China-specific news that we're looking at here, is that China just unleashed a crazy, crazy level of stimulus. Not as big as the great financial crisis stimulus or the coronavirus stimulus or anything of that size, but still very, very, very large. We're talking about $284 billion in equivalent money. Now it's in the yuan, but we're talking about the equivalent of $284 billion being directly and indirectly injected into the Chinese economy. Now, what happens is you might say, well, that's just China, but the answer is no. Much like gold or even stocks, even U.S. stocks, what happens is that liquidity chases after assets as well. Obviously, this is going to have an impact on things like Chinese housing, Chinese consumption, but there will be liquidity injected into assets such as Bitcoin. That means stocks as well. But Bitcoin really does grab onto that liquidity as it's being injected into the economy. So if you think about that 284 billion being injected, yeah, they are buying houses and they are spending money. They're not just investing it or taking care of their housing or, let's say, credit card debt. They're actually putting money into assets, like I said, stocks, and very importantly for you, if you care about Bitcoin, is that money is also bleeding, leaking into Bitcoin. Will 284 billion go into Bitcoin? Absolutely not. Next to impossible. That's just not going to happen. And it doesn't even make conceptual sense. But if even a small fraction of that money makes its way into Bitcoin, Bitcoin will catch a bid, as they say. And that means that we will see an increase in the price of Bitcoin, although it might be very slight, and there might be other factors happening in the world, escalation of war as an example, or certain numbers coming out from the US government kind of suppressing the demand of whatever, right? So it could be just pushing numbers around so the liquidity can increase, but the news might push down the price of Bitcoin ever so slight. So it does not mean that, whoa, there's more liquidity and instantly we're going to see an increase in Bitcoin's price. But in the medium and definitely the long term, assuming that that money goes into Bitcoin, there will be a fraction of that will kind of stick forever because Bitcoin investors tend to be hodlers, HODL, hodlers, or yes, we'll call it hodlers. Different ways to say that. Now, the third piece of news is that Bitcoin and China go together in a certain way that is different than what you might expect. And that's because when China does what China does, it makes other countries pay attention to what they're doing. And if you think about it, if there's a massive injection of liquidity by the Chinese, and there has been, then that devalues their currency. It devalues their currency. It's like the same pie, but there's more yuan chasing that pie. There's more dollars. There's more money chasing the same number of goods. So that does, of course, increase the price of assets. I think that's pretty clear. But in the case of China doing something, because China's so big, many other countries, including possibly the US, but European countries as well, will feel like they need to possibly keep up with or follow along with what China has done with yet more debasement, more money printing, more loans being issued. So more liquidity will likely come into the system, either from China doubling down or saying we need more, or the US doing that, or many other countries as well, simply trying to keep up with the debasement, the money printing, and so forth that's happening in China. So they're possibly setting the stage for other liquidity from other sources to come into the system. And again, lather, rinse, repeat. If we think about the cycle here, that means more liquidity in general. Overall, China pushing, tip of the spear, happening first, but then it happens in other places. And yet again, that means that the possibility for Bitcoin going up is profound. Okay, but the matter is how much we don't know yet, but we do know that liquidity does have an impact on Bitcoin, and the more liquidity, the more that positively impacts Bitcoin. The less that we have in terms of liquidity, or liquidity is sort of it dries up in one way or another, then that has a negative impact on Bitcoin. Now, you will see more about this in other Bitcoin related videos that the Rhodes brothers have put out right here through Greater Wealth Through Mastery. So I encourage you to like this video, if you would, subscribe, and we will see you in the very next training. Take care.